Hey everyone, today I wanted to make a quick video covering one of my favorite setups to trade, and that is inducement. So in a bullish scenario, inducement is essentially when you have a pretty clearly defined uptrend, you start consolidating a little bit, then you see a quick run below some local lows to gather liquidity, and then you see some continuation higher. And in a bearish scenario, it's pretty similar. You have a pretty clearly defined downtrend, start consolidating a bit, you run local highs, and then you can anticipate a potential move lower in the continuation of that original trend. So another way of putting it is that inducement is essentially a break of structure without any displacement. So you see we have a break of these highs, but just a wick through, and we start closing back below and see continuation lower. Or we have this local low here, we run it by about a couple points and then continue higher. So in both cases, we did break structure, but there was no significant follow through from price. And the fact that price couldn't push past these levels indicates that we could potentially see continuation in the other direction. So this is a decent example here. Again, you preferably want to have a trending market before these setups occur. So we do have these lower highs and lower lows for the most part. We do see a quick run of lows, but again, a lack of displacement. So price just chops around for a little bit, eventually closes below them, comes back up, induces this level right here. And so we again have a lack of displacement and then a quick close lower. And following that, you see a continuation to make new lows. And again, in a bullish scenario, you want to see the same thing. You got these strong higher highs and higher lows. Then you see this quick sweep below old lows to potentially pick up some liquidity. Then you see price run in the other direction. Now, one thing I personally like to do is combine this logic of inducement setups with volume spikes. So if we go to this indicator and turn on volume spikes, with these settings, I'm looking for volume spikes that are 2 times greater than the volume moving average of length 100. So as an example, we have this huge morning sell-off and price is pretty much just consolidating for this entire day. And we have this pop above old highs where we see some volume spikes, and we can assume that means that we're picking up some liquidity in this area to head lower. And that is exactly what happens. We do make new lows before the end of the day. But again, really what this comes down to is this idea of a lack of displacement. So you see a break of structure, but price is not holding above and closes back below pretty quickly. And my buddy T-Trays just made a video on this, so I'll link that here for you guys to watch. But it's a very important concept to understand when you're looking for these types of setups. So I did make this script to try to help you guys have an easier time finding these setups. Obviously, not every signal is going to be accurate. You have to pair it with your own structure and bias. But just to go over how this works really quick, basically this number is just determining how you see your highs and lows. So if there's a local high or low forming, it's asking, is this point higher than the 7 candles to the right of it and the 7 candles to the left of it? So obviously if you want to see every potential stop hunt, then you want to set this to something low, but I find that this can be pretty crowded, especially with the next setting, which is stop hunt type. You can set this to wicks only, so it'll only show stop hunts that take out the initial pivot but then close back through. Or you can set this to all, so you can see where all the significant pivots that you marked out are breaking. And obviously, again, we have a pivot strength set to 1, so you're going to see a lot of data here. So if we put this back up to something higher, like 5, then we're only going to see breaks of some fairly more significant pivots. And this setup just determines which stop hunts are shown based on how far they puncture through the original pivot. So in this case, we broke this old low by a few points, but if we set this to something like 10, then we're probably not going to see it. This setting just determines how far back you want to look for stop hunts. So it's set to 200 right now, so that means it'll look back 200 minutes to see if we broke some previous highs or lows in that time. And this is the opposite of that. This is the minimum number of bars to look back. So if we set this as something large like 100, it's only going to look for stop hunts that broke a pivot from at least 100 candles ago. And I just find this helpful for when I'm looking at super low time frames like a 15-second. If I was on a 15-second chart and I only wanted to look at stop hunts from pivots that were created at least 2 minutes ago, then I would set this to 8. And session time is pretty self-explanatory. It's just when do you want to see all this stuff on your chart. You can set it from midnight to midnight or just have it during the real trading hours. And so for volume spikes, we're just looking at the candle that created the stop hunt, and we're looking to see if the volume of that candle was greater than this times the volume moving average. So you only see these arrows when the candle that broke the stop has a volume that's 1.5 times the moving average, which is this red line here. And then obviously this is just a style, so you could change how this looks. But that's everything. I'm going to leave the link to this in the description for you to try out. Let me know if you have any questions. If you found this video helpful, please feel free to give it a like and a comment, and I'll see you next time.